Welcome, everyone. Good morning. It is Wednesday, the day after whatever you want to call yesterday. Nothing seemed to work out for anyone like we thought it would, or folks thought it would, just about everyone. Things worked a lot different and still are in the counting of votes. How exciting is that? So before I get into today, go ahead and make sure you subscribe, hit the like button, and hit the notification bell. And the plan is, as you know, to come live every morning at 9:15 Eastern. And there's going to be one interrupt a couple of weeks out, but that'll be talked about when we get closer. Anyway, fair amounts going on here, folks. Futures S&P down 19. We got Dow up a little bit. We're up a little bit in yields at 415. Just doing it kind of a quick cursory look at what the environment is. Bitcoin absolutely getting destroyed. And I told you yesterday when we did Bitcoin at the end of the show, the algos are suggesting a complete collapse. And if you, I'll go over that here in a little bit. There's just man, it's really starting to fall apart. And I'm not sure, I'm not a crypto guy to the level other than watching it from a technical viewpoint, so I have no idea what's going on. I don't know, it went from crypto winter to something else. I'm sure somebody will come up with some great meme or some type of term to describe what's going on. But the word collapse comes to mind. We took out a lot of those support numbers. I'll go through that in a little bit. As far as not a lot coming out, we have mortgages, mortgage apps, and some things like that. No big deal. Tomorrow is the big deal. We have CPI coming out, and I'm not sure how all this is going to work. I think this scenario that we were watching trade, even going back into Monday, there was a really good bid in the market, and there was some decent trading yesterday when we were talking. I remember going over the algos, which I'll do here in a few minutes, on the hourly charts, and it was looking for about a 3-hour upside bias and then turning south, and we did that. And even overnight, I put out on Twitter that there was that we should hold the 37.84 level. That low overnight 86. The last time I checked, I'll redo that here in a few minutes. But I'm going to go hang with you all the way into the open this morning. If you have any questions that might come in, I'll look at those as we just kind of hang out here before the open. And once we get the open, I'll go through all the whole scenario. We're going to go straight through. I have some things I want to talk to you about today on the macro view of the markets going forward. And we'll talk about that at about 1:30. There's not going to be a break today. I'm just going to go straight through. I'm not seeing that the breaks are advantageous, so we're just going to keep the tape rolling, so to speak. Just looking at news here, just prior, nothing really coming out. There's some international stuff. I'm just looking here. Nothing really to set up here, other than I think disappointment. And the chart over in the far right-hand upper corner there is the S&P 5-minute. You see they're kind of pressing the lows on here right now. And as always, I'll switch over to the level 2 chart when we get to the open. We'll spend about 3 or 4 minutes, maybe as many as 5, depending on what kind of activity we're getting, talking about the openings. Trying to get some things for you every day set up so you have a pretty good idea of what's going on. Those of you in the live room, I'll see you there at 1 p.m. Eastern time today. And as I've been telling you, if you do get the indicators, you get in our live room for 30 days, kind of complimentary, 2-for-1 sale, whatever you want to call it. So make sure you check that out. But listen, folks, I'll go into maybe a little bit of a rant. We'll see what happens at about a half hour. And about a half hour after the open, we'll go through that. And I have some other things to go. Just remember, tomorrow I'm going through commodities. I'm going to go through probably mostly metals. I'm just getting a bunch of stuff together. I want to go through a pretty expansive view of metals and tie that together with what is going on with the economy. I would just say this preliminary is nothing changed overnight. The elections changed to nothing. It looks, there's still so many things out. We're kind of rerunning some of the runoff in Georgia drama again, all that kind of stuff. So I'll talk about that a little bit. Just looking at, there's really, like I said, I'm looking at the news here. Nothing really is coming out. We could talk a bit about, we've got about 6 minutes to the opening here, and we could talk a little bit about what's going on in the tech world, Meta just melting down. I hate to say maybe I'm right, but it looks like, and I've told you folks this before, that probably 5 or 6 years ago, I said between 5 and 10 years, you won't even know that Facebook exists. So they've already changed the name, which is a bad sign, to Meta. And, the metaverse, I don't know. No one's going to live in the metaverse. I even saw a comment, which is an odd comment, that Zuckerberg said, I was wrong. So what do you do now, Zuck? Let's see what you can come up with. Eric, the live room is live. It's in a private room. There's no delay here. I think we talked about this yesterday. I'm pretty sure it will help a lot if you scrub backwards for a little bit here on the live stream and then move it all the way forward. You should get most of the delay out of the stream. It's just a YouTube thing. And there's no way to get around that at the moment. So we'll have, the live room is a private room. It's a private server, nothing to do with any of the big media or anything. It's completely locked down. We can share files, all kinds of stuff that goes on in there. So it's a pretty good education, trading, and more. You never know what can happen in there. That's funny. I'm just looking at some of your comments here. We've got about 5 minutes to go, and what we're seeing is they're selling this thing off into the open. I'm going to switch screens here. We might as well just get ready for the screen. Get ready to get into the open here. Let me just change the screen here around. So we're printing almost the low of the session, 3809. So we'll just stay right here for the moment, and I'll see what you guys are doing. And David's right. You can also change the speed to 2 times X. It'll bring you up to current. That works. You kind of get gibberish. Either way will work, I believe. We actually tested it the other day. Yeah, James, nice to see you guys, everybody in the morning. This is like starting a new job for me this week. Yesterday, I left the office at 3 p.m., had a lot of stuff done. It was very productive, so that was fun. Went and voted, did my civil duty, and that was pretty good. Yeah, I'm just looking at some comments here, folks. No, is WaveTech and the indicators the same thing? No, they are not. WaveTech is a portfolio management platform, and the indicators are on TradingView right now only. So still pressing these things. We're 3 ticks off the low of the session as we're about to kick the bell off. We're about 2.5 out from the open right now. We'll actually get an opening bell sound, and we'll get going into today's session. Like I've told you before, this is, for me, one of the more exciting times of the day. Here we are, 1 tick off the lows of the day, new lows on the session, so they're pressing them right into the open here. A lot of selling coming in pre-open. I don't think very many people are very happy about the outcome of the election, so, but, there was a lot of expectations that there would be a much different environment going forward. Looks like we're going to get more of the same. More on that later. So here we are. We're out about a minute and a half for the bell. We're getting some pretty big blocks of red. You'll see there's a time in sales. Hopefully you can see my cursor here. And you'll see a couple different blocks. Every one of these, when you see the colors, those are one trade being broke down how one block of trades went. So when you see these big bright red blocks, those are most likely algos selling. And we're going to kick off the volume, as you know, here every morning we go through this, but this volume rate of change will start to kick up. You'll see this most recent bar here will start to really crank here. We'll get a new bar and it will crank up. There's a bright green is algo buying. There's some algos coming in buying right here. So we're just coming in here. We're in about 30 seconds to go. So let's take a watch and see the opening. A little bit of a bid showing up here. There we go. We're open, and we'll start to see what kind of action we get. Trading at the low of the session right now. 37.97 is a number that keeps coming up. I'll show you this as we get into looking at the algos and going through the setups here off the markets. The plan is, and I'm going to try to get this, yesterday completely dropped the ball, folks. This new format is still coming together. I didn't even talk to you about the expectations for the market grid yesterday on the daily. We'll get into that today. So pretty stable here, not a lot going on. Volume's fairly low. Order book is a little thin, but it usually is at this time of the day. But for the most part, we're just seeing some stabilization here. Here we go, trying to press the lows again. Like 850 bid right now. There's new lows. Not a lot going on. Basically, we're trading at the lows of the session, but not a lot of activity at the moment. I don't know if they're going to press the 8 even handle or not here off the open. What we got? We're 1 minute in, so we'll watch another minute of this and we'll get into going through the algos here. Here's a little bit of a bid starting to come back in. So we printed a new low. Those of you that have been in the live room, you know, on these new print lows, I like to come in as a buyer, just as a scalp. They almost always bounce 200 to 300 points. So there's a lot of scalp opportunities around these prices. Here we go again, trying to press the lows. There's a new low, 550, 475 prints. So we're looking at possibly testing down to this 97 even level. Let's go ahead and get into, let's take a look at some of the algos here and just see what's going on. So 1 minute is printing down here pretty good. Algos are suggesting we have about 4 or 5 more minutes of pressure coming in, and then possibly we'll get some stabilization. This is a 1 minute chart that I've got up here right now. You can see where it's grayed out. We just got an update on the one. We're starting to, looks like a few bars out, we should see some recovery, probably back toward the moving averages here. Let's go to the 5 minute, just get a setup here. We just hit about at 7:00. So at 9:05, we had some algos come in suggesting that these dots that you see here are the WaveTech Fibonacci projection to the downside. So Fib target 1 was 0250. So we came in just short of that. Well, we didn't. We trended 0175. So while we were switching over, we did get a print down there. So this is suggesting one more bar, and we should start to see a little bit of recovery in the next 2 to 3 minutes here. This is 5 minutes. In the next 10 minutes, we should start to see this thing firm up. I suspect these moving averages around 12 to 14 are going to be a wall right now. This is what we'll go through the setup now for the day. And I believe what I'm going to do next is, as soon as I finish this setup, we'll go ahead and get into the flow of the presentation, similar to what I used to do in the evening while the markets are trading here. So we'll continue to get kind of get a flow on how this is going to go. This is one of the things I noticed earlier. We have 3 Fibonacci projections on the downside on the hourly, and that's for 3770, 3742, 3724 on the downside. And right now the algos are suggesting we're going to stay in this downtrend, and there's going to be major resistance between 3814, 3825 here in the next several hours. The potential on the downside, like I said, the minimum is down to that 3770. And overnight, I was talking about this 3784 level that held. 86 was the low, but now we're starting to press this thing back down again. So let's take a look at. So that the setup says we're looking at probably this hour is going to be the low. We should start to see some stabilization at whatever we get out of this hour. Look for the market to come back toward these moving averages. Like I just said, 3814, 3823 is at least the next number. Wish I could hang with you folks the whole day and give you some more guidance. Let's go ahead and go to the NASDAQ here. NASDAQ's got a little weaker tone. It's suggesting maybe stabilization, but we're going to continue to see the 10-period moving average roll down. We're likely to see the targets are still down here, potential for 10,800. Last trade, 10,984. So we're just looking at these moving averages that are down. This is a 1-hour chart on the NASDAQ. Are going to continue to be pressuring this market to the downside here. And it's just nothing good is going on here this morning. I think this has everything to do with what the expectations, I guess the failed expectations of the markets, thinking that there was going to be not necessarily a red wave, but that there would be more of a divided government than there is. It's almost as if we're right where we were before. Let's take a look at the Russell real quick. Russell a lot weaker. We're rolling down pretty good. The fib target 1 is 1769. Last trade 86. So there's a fair amount of downside, but this is interesting. I want you folks to watch this. The algos are suggesting that this bar, this is hourly, that this is going to be probably the low bar, but what will persist is that there's going to be resistance right at these 1805, and this number is coming down. Let me give you a number. About every hour, about 2 handles, so probably around 1800, 1898 will be major resistance. So expect all of these markets to remain under pressure here. I think what I'm going to do is I'm going to throw it in here just because there's stuff going on here. I'm just going to throw up the hourly Bitcoin. Somewhat interesting. We're starting to get STX buy signals coming in down here in Bitcoin, but we're trading down here at 17,432. I told you yesterday, watch out for 17,200, 18,200. That was a key number there. So let's go ahead and go through a normal sequence that we usually go through, folks. I'm going to go through the database here on WaveTech. We'll go ahead and do that. Then we'll go through the indices, and we're going to roll all the way through. No breaks at the top of the hour today. So we'll go ahead and get into this. Okay, so this is interesting, and I've been talking to you about this for a while. And what we're seeing is the database continues to get a lot of traction in spite of kind of a sideways trading range we're getting. We're now at 51% bullish, 51.4, 1,933 buy signals this morning, 173 sells. So one of the things that I've been discussing over the last, I don't know, maybe couple weeks is that this database continues to get a lot of traction. And let me explain what that means. Is what's happening is a lot of these trades that are coming in on a short-term database have a duration about around 35 to 50 days of holding period. And I'm looking at this sheet. It's too small, I'm sure, for you to read. But I'll just tell you, right now we're into average days long. Right now, current duration is 6 days, and the average long is 33. So we have, let's just say, another 2 to 3 weeks that a lot of these symbols are going to continue to hold and have expectations of a trend. So when we get a buy signal, what that means that there is a strong probability that those stocks, mutual funds, ETFs, whatever's in that mix, it includes everything. There's 15,959 symbols in the database. So that is suggesting that we're going to have a continuation of the underlying trend. We can go back. 3502 low is there. And I'll just throw in some other ideas and things here. You have to look at everything that's been absorbed since the 3502 low. We've had absolutely horrific inflation numbers, all kinds of different elements hitting the markets, but yet they tend to hold. And we're trading 3,800. Not a big deal. We're 300 points off of the lows. But what we are seeing is this consolidation. And I've been talking about this for a while, that at least, let me rewind that. At best, we're going to get this sideways trading range. We could see some upside. I've been talking about potential. I'll go through the technicals here on everything here in a minute. But the basic flow that's happening here is that it's positive. The underlying tone is positive. Now, if we get up to the 62 percentile range, something like that, then that's going to be pretty much peak numbers here. So in this type of sequence where we don't have a lot of intermediate trades long, but we did get some buying, and what I'll just explain that in case you're new to the channel, is what's happening is we have longer term buys, which have holding periods of about 200, and then the short term buys have typically a rotation about 35 to 50 days, what I was talking about. So sometimes all of these buys coming in on the short term will lead us to the next level, which will get us to the intermediates to come in. We actually saw some traction, not a lot, a few percent. We're up at 19% long on our intermediate database, which means 8 out of 10 symbols in our database of 16,000 have no position. So there's not a lot going on intermediate trends. So we haven't seen it start to turn the corner. And the metrics that I watch for on all the databases is 22%, 22 to 28, and above that, and then 42. And we're right now on the short term, well above 42 at 51. And typically they'll go to 62, maybe 68% bullish, and then it starts to grind, and then you see some rotation and possibly back into a liquidation mode. We'll see, just have to play it by. Every cycle is similar but different. And so that's basically what I'm seeing here, is that we are still getting traction regardless of day-to-day price action. A lot of folks seem to think that the markets are the indices, and they are, but they're heavily weighted. Looking at an environment like this that I show you folks every day gives you a little different feel. This is looking at each individual stock on its own merit, not combining it into an index. So index trading is fine, but this is actual looking at individual trades. And there's, like I said, 51%. That's typically 62 to 68 is where it goes. We've seen this database get as long as 92, 93%. It's very, very unusual that most of those numbers came out of back in the pandemic days. All right, so let's start with the S&P. We're going to go through the normal cycle like I did in the evening. Today, I'm still trying to figure out how the best way to flow this morning show. And so right now, we're actually looking at markets 38.0506 current price. But something interesting, I thought when I came in this morning, I'm like, all of a sudden, you see these green dots up on top here. These are Fibonacci projections to the upside: 4130, 4292, 4392, and well above. This is the 200-day moving average here. This is the daily chart here. So we're just not seeing, this is a surprising number. The algos are suggesting that we're going to stay in this sideways range, still suggesting that we're going to stay above the 21 period moving average. That's 3770. That is a pretty big support right there. And what we're starting to get, at least the last couple of days, we're seeing some consolidation. And like I said, we're still getting the configuration where the database is still getting long. It's Wednesday, so we've got a couple more days before we get into Friday and start looking at the intermediate. But I think the next couple of days to digest all of the expectations of the elections, followed by the disappointment maybe, is the whether we're going to get follow through on the upside, and if anyone cares. And there's something to be just said. I just want to, I'll come back on screen for a second here. And I just want to say there's the seasonals. I'm not a big on seasonals and midterms, this happens, all that kind of stuff. I think everything's different. I think we're in a pretty unique environment right now from the standpoint of what's going on in the economy with the Fed, QT going on, raising rates. Nobody thought we'd be sitting here at a 3.75, 4% Fed funds rate. We are. I saw the effective rate this morning is 3.83 on the last trade on the funds. And so no one thought we'd be there, right? And we're there. And as I've talked about, and I'll go through the yield expectations here in a minute, but this is just a continuation of everything that I've been talking about in this consolidation phase that we're in. And whether or not this ends up to be a bottom, I know a lot of folks are pushing back, but I'm telling you, I'm going to go through. On Friday, I'll go step into the longer term. We'll look at maybe the quarterly charts, some other things like that. But the secular bull market on these equities, particularly S&P is where I focus a lot, are still positive. And I talked about that trend. I did discuss it the other day, that we're locked between the 10 and 21 period moving averages, and they're both sloping up at a pretty reasonable rate, suggesting that we're going to at least climb into that, possibly into year end. Maybe there'll be a shift there. We'll see what's going on. But just going back to this daily chart that I have on the screen, The algos are suggesting that we have 2 more days roughly of sideways. So we're coming into Friday, and then there's going to be an upward bias as we come into next week, which I think is interesting. We'll see how this flows. I'll be updating this every day. Next, we'll cover the NASDAQ. You know, before I do that, I almost did it again. Let's go back to the S&P here real quick before, I know I'm blending it. The markings are going to be messed up on the channel here. But I just wanted to talk about the expectations for the market grid. So we're looking at today R1 55, S1 15, so we've already printed through that, and S2, so 3793, I mentioned number 3797, so look at 3793 as a pivot. Below that 71, which is that major support that I talked about. All right, let's go back and let's try this again. We'll go back to the NASDAQ here. So as we look at the NASDAQ, same scenario for the most part. This is the daily, and we have different, not as strong as objectives here, but we do have a little bit of an upward bias. And right now, just looking at the market grid on the NASDAQ, we'll get that out of the way first. R1 11,167, the high 11,164. So we printed an R1. R2 is 12,248. And on the downside here, we're looking at S1 11,021. We printed 10,969. And the next level below that, these numbers are on the far right-hand side. If you have a big enough screen, you should be able to see them. S2 10,939 is probably the number. So I'm expecting probably a little broader range possibility of S2 on the downside. It looks like there's a little bit of a bias, but on the daily, it looks like we're coming into a phase where we're likely to stay stable. PPM 3 is starting to show some pretty decent input here on the upside. I'm going to add one of our indicators here down at the bottom. I'm just going to put the 200 on here, and the 200 looks like, yeah, we're just going to have a locked-in range here, but expect to see some stabilization after probably today is going to be the probably the end of this thing. Probably just stable. We're not getting a lot of downside at the moment, at least from what I'm seeing on this chart here. All right, so we'll look at the Russell, which is, once again, this Russell got this upward projection very similar to the S&P. We've got upward projections 1990, 2079, 2134. These are pretty big numbers. That's well above the 200-day moving average. You can see that's at 1860 is that number. Last trade right now, 1788. And so we're really just looking at the this sideways pattern as well here. We're getting down to the downward limits. There are some downward Fibonacci targets right now, 1737. The algos suggest on the Russell that there are a couple more days of weakness. So I think what I'm getting from just going through this sequence here is we're basically locked in a sideways range. I think the upside is limited. Downside to some of these support numbers that I've mentioned is probably going to be it. They could break down. You know, I think, I won't be covering these things today, but, you know, there's just a lot of issues. I mean, Tesla is just getting hammered right now, and that's likely to continue. I think maybe yeah, maybe we're going to see some things. I'll save that to later, but I think there's going to be a lot of shifts in how money flows and where the money's going to go as we go forward. I've talked a lot about the Russell, and I still think those of you that are in the live room, I had run across something. I just haven't had the time to really dig into this scenario that I want to put out, and I was really kind of hanging low, just waiting for this election to come out. So now we have it. I think if I used to write annual outlooks every year, and that's a really hard job to say, okay, this is what I think is going to happen next year. And it's something that is required in the institutional world. And it's very difficult. It's a dartboard game at best when you're looking at stuff. But I think nobody's going to be able to make really any reasonable forecast until we get through the next Fed meeting, and especially since this election just ended up like it did. It's not good or bad, it is what it is, and we have to start to process what some of these things mean in there. So let's go ahead and move on to the interest rates. All right, so the 10-year just continues to waffle. I told you that the expectations very, very low end, which was a print that we had last week at 392. I really think 399, 424 is on the upside. Right now we got 415, where the algos are suggesting really a little more short-term strength maybe for a day, and then really just looking at the market supporting down at and around the 408, 404 level, not looking for anything big at the moment, any upside. I think sideways is going to be it. I talked about these Fibonacci projections. You'll see where the green dots are, where my cursor is moving right here. That is targets of 468, 497, and 515 are targets for the yield. I have no reason not to believe that these aren't going to be reached. Earlier in this pattern, you'll see these longer dots here. Those were previous projections that were coming out of early October. Now they've been moderated a little bit as the patterns have become more revealed at what's happening in this particular cycle. So we're seeing this actually starting to moderate, maybe a 460 yield. Like I said, I think if I was going to be trying to write an annual report, I'd try to hang on as long as I could. I wouldn't be, in fact, I'd want to hang in and say, hey, I'm going to write the report in the 1st of January. And I did that a lot because it's very difficult sitting here right now. It's trying to figure out what's going to happen. And I would not, let me just make this clear, I would not want to be working at a bank right now, and that's my job as an economist or someone to have to write, here's what our firm's stance is and expectations for interest rates and the markets and all that. Very difficult job. And it's not that there's no way right now, I don't think there's enough information to make those calls. And pretty much whatever you do, everybody that is being tasked to write those things are sitting there going, man, I don't want to do this. This is not going to end well, because it's way too difficult. In my opinion right now, there's so many loose ends as we come into year end. It's amazing. And we're going to be probably weeks. We're probably going to have a Georgia runoff, all kinds of stuff that is likely to go on. So let's go ahead through the cycle here. We'll cover crude oil next. So crude is coming off a little bit here. We're at 87. I hate to sound like a broken record, but 86.92 is the range. We printed up the other day. We got to 93.74, so we printed up toward the extreme. Still looking now from the algo standpoint is that we're going to have a slight downward bias here for another 3 or 4 days. As far as the patterns go, we should see it start to set in. We came pretty close to this Fibonacci target zone that's down here. Let me get you some numbers off of that. Those numbers right here are 79, 74, 71. We basically traded down near that. We've got down to 81 about 2 weeks ago. I still think 86.92 with a cap around 98. And I'm not going to go to the weekly charts and show that. And I think oil is just going to be choppy in here and see some consolidation, slight bias to the downside. I don't think we take down that 79 handle at all. I think we remain right in this range from this standpoint. But the algos are suggesting some more downside, not drastic, nothing like what we're seeing. And I'll go back at the end and actually cover Bitcoin again, because I think there's a lot of trouble in crypto land here. There's an awful lot of trouble. Okay, let's go ahead and move on. Let's go to gold. We'll get through the whole spectrum here. So as I've been discussing over the last 3 weeks, that I was seeing some improvement in gold. We're still seeing that. The algo suggests that we've got 3 or 4 more days upward bias. We should see the 10-period moving average start to move into the patterns at 1667. Last trade 1716 right now. So we're going to stay above those levels. It really is across the board showing an improvement. I'm going to go over to the weekly charts here, just so you can get a little better view on intermediate. And this was something that I was talking about quite a bit, actually, going back several weeks, that we're looking at a turnaround. And you see this is kind of a rounded bottom on this market grid here. This is what I call a bubble bottom. You just get this rounded bottom, and we're trading almost at the extreme levels here, 1717, 1729. So we basically traded at 1720. So we traded R3 weekly, and pretty strong market, but we have some things coming into play. 1724 is the 10-period moving average, and what's being suggested, the 21-period moving average, is what's being suggested is that the algo is suggesting that we're going to see a penetration of the second derivative, which suggests that we will trade above the 21-period moving average. So 1724 is a number I've been talking about as a resistance point. Above that, we still have in this pattern 1739 is the 200. So we've got kind of a range of 1724, 1739 is probably going to be somewhat of a short-term peak, but ultimately we're going to go to 1806. And just real quick, tomorrow my plan is on Thursdays we're going to cover commodities. That's going to be the special session on commodities on Thursday, and so that's going to be every Thursday. So I'm going to go through quite a bit. My plan is to kind of dig into the metals and go across the board on a bunch of metals tomorrow, and that will be in the second half of the show. We're basically in that second half right now. So I'm going to go ahead and run the gamut. I'm going to cover Bitcoin, and then we're going to come back, and I'm going to talk to you a little bit about some of these things that are coming up on mind as far as kind of a macro view on what's going on in the economy and some of the other stuff that's happening. But I think that the gold situation is starting to improve, and it's like, wait a minute, Bob, if what's going on? Is this because inflation is going to be persistent? What is this about? And I really think what we're seeing here is gold has been very resilient. I told you we should have traded into the 15 handle in gold, and that didn't happen. These algos actually called this thing absolutely perfect going back a couple of weeks. But the key is going to be probably in the next 2 or 3 weeks, we're going to watch this market trade. And from my viewpoint right now, staying above the 10-week just simple average is going to be the key. That's 1680. I'm rounding off 79.40, but 1680 is going to be important. So probably we'll see consolidation somewhere between 1680 extreme downside, on the upside 1724, maybe as high as 1740. That should be where we get locked in. And from that pattern, can't read it right now, I think from that pattern we're going to be able to determine whether we're going to go into the next level. I'm just looking here, potential 1800, say the natural level to go next. But I'm trying to put the scenario. I talked to you folks about this before. I've always done something called reverse fundamentals. So if something says this is going to happen from a quantitative or a technical standpoint, what is going to make that happen? I don't have that answer for you at the moment. Okay, so I'll go ahead and cover Bitcoin, and that'll put us at 805. So I'm going to have quite a bit of time to go through some other aspects that I want to talk about tonight. But this chart is just amazing to me, because what's happening, it's telling us PPM1 is in a full-out collapse. Now, I've never seen... These algos are fairly new, probably getting about 10 weeks right now, and I'm still studying and learning about their characteristics. But most of them, I've never seen one predict this collapse like this. And I'm going to draw something here, because I think this is what I was talking about earlier, is it feels like, how's the best way? It just feels like there's something really, really big about to happen here, and it's not going to be pretty. And I think what maybe the algos are picking up, I'm going to draw something in. I'm going to spend a few minutes with Bitcoin here today, because I think that's going to be it warrants the time to be spent here. So I think what's happening, I'm just going to draw in some of these things here. This is the algos are just kind of doing this, and I think what's happening is this chart, this pattern that's being picked up on this downfall is what we're really seeing is what's been going on up here, right? And so if we started to do there's no downward Fibonacci targets at the moment. But I'm surprised we haven't gotten anything revealed just yet. This is the weekly chart that we're looking at, but this would be the next natural. And I talked to you about this number here, which is basically 9,800, 10,000. So this is probably potentially the target. If these algos are right, all of them, if you look here, are just, this is crazy. I've seen them go down a little bit, then they stabilize. This is not the case here. So this is something new. Is it going to be right? So far, it's starting to feel like there's something really, really big happening here. So let me go over. Let's do a daily chart here and see what we're getting from here. So here's the downfall. On a daily, it looks like we've got maybe 2 or 3 days of more acceleration. So prices are going to stay low. Don't even have any Fibonacci projections here as well. But these moving averages are still going to be accelerating. And even though it looks like these PPMs are being projected to get better, they're still negative in trend mode. So what that means, typically what that means is that the market will stabilize, rally up to these moving averages, and then there'll be a rejection point somewhere up here. And I'll talk about that as we go through day to day. I think that this pattern is going to unfold fairly quickly, and that weekly pattern I just showed you is absolutely shocking. It's one of those that is very difficult to explain when you see something like that. And like I said, I'm not a crypto expert. I don't know what cash flows. Maybe it's this stuff with FTX and Bitfinex and all this crud that's going on. Maybe there's another big failure coming into the markets there. I don't know. Maybe you folks know. You can comment if you're more privy on that. I'd love to see your comments. But the bottom line is there's something big going on here, and whether it's just a complete collapse, because a move down to 10,000 on that weekly chart that's a big number. It wasn't that long ago we were at 63,000, and it just continues to move down. I mean, if you think about what happened with all the stable coins and all this stuff, it just seems to be one train wreck after another. And certainly on the weekly algos, that's what's coming up here. Okay, folks, couple things that I have some notes here. I just wanted to discuss. We're about 10 after the hour. We got about 20 minutes to go. So I'm going to talk a couple things about some of the things I think that are starting to look like are setting up. And like I said, we don't even really know the election outcome at the moment. We're really looking at a very, very, I don't know, confused picture of what things are going to look like. And, listen, these jokers in Washington, they have some influence, but one of the things that is potentially coming up, and whether on the Republican side, is how serious are they about the debt ceiling? How serious are they going to get about some of these hardcore issues, primarily with the Freedom Caucus and some of these folks? So we're going to bring in some of these politics for a little bit, but if they are willing to press it, if you think back several years ago, and when we had the sequester and we had all these different things around the debt ceiling, all of those things, they ended up being, I guess, more emotional than realistic. Always, it's sort of like your favorite disaster movie, Bruce Willis disaster movie, that I always think of that asteroid when they're going to blow it up, right? 10 seconds before it hits the earth, they blow it up and everybody's saved. That's sort of what the debt ceiling is really like. Are they really going to throw the U.S. into a default situation? I don't know. That'd be pretty, I guess, extreme, and I don't know that that's going to happen. But there's certainly going to be some emotions that are going to come into the markets, likely around some of this stuff. So this election was significant from that standpoint. What I'm thinking right now, and listen, we don't even know really all the outcomes of anything, right? So what I'm thinking right now is, at least in the House, we basically know that there is going to be a majority on the Republican. Are they going to really push this stuff? I think to a point, to make a point. I don't think they're going to roll things over. I've talked a lot about the whole situation with the debt and everything that's going on. Interest rates rising, all this stuff that's going on. I think we're gonna find ourselves in a place that there's going to be some really, really big decisions to be made, and they're not all going to be on the Fed. So there's going to be I think some there's going to be some new elements come in, I guess, what I'm saying that we don't know about. And I'm just going to say it's probably good or bad. I don't know what they are, because this is just speculation on my part that any of this is going to happen. But I do think that you're going to see kind of an inverse of when Trump was in, I think, impeachments and all kinds of crud, political crud. And that is that going to affect the markets? I doubt it. I think that really what we're going to be having to watch is some of the situations that are going around the world. We still have the Ukraine-Russia thing. There's just so between geopolitical, between the now we'll say U.S. political scene changing just enough that there is some potential disruption. I think things will be more uncertain, and I don't necessarily think that is a negative at the moment. And that's why when we come into Friday, I'm going to go back through, do some summary of the week that we went through this week together, and actually start to maybe formulate some of these ideas a little bit more. And I think what there's no outcome, folks. There's no way to come up with anything at all. So here we are at quarter after. I just want to look at some of the activity on the markets. Tesla on top right now. Let me change something here. Somehow this thing didn't get. I want to change it to the most active by volume. It was set on trades. Right now, TQ's again 54,828. So folks are still buying this thing. So it's pretty amazing. There's a lot of volume there. Meta's at down the list here at 35. Tesla's down here. Let's take a look at Tesla. Tesla's trying to get a little bit of a bottoming pattern set up here, but I think a lot of these stocks, these stocks that we're used to watching, look, it's always good. I know people think, oh, they laid off 13% of their workforce. Well, Meta's up 7% because they're cutting cost. It's a positive. Knocking off bodies on body count is always a positive. And some folks get that misconstrued, I think, a lot of times. But I don't say, I guess Disney is the other disaster out there, right down 10%. And it's interesting that all of these stocks, and just want to mention a couple of these right now, a lot of these stocks that are getting cratered, these companies are, they're in trouble. Look at Netflix isn't on here, I don't think, on this, but I won't bring it up. But you look at Netflix down like 50%, at least it's bounced. It's not down 75 like it was. So all these streaming companies, all this stuff that was good isn't as good as it used to be. So and the point of bringing up some of this stuff is I believe there's a shift, and I still think that the shift is probably more toward the mid and small caps. I'm still on that theme that I talked to you folks about. Sometimes I don't know if I talked about it on this channel or on the live trading room, because I'll get into some of these elements as well in the live trading room. I'm just thinking that we're going to see a number of things here. And I know I was just looking through these charts. I know you can't see the charts I was looking at, but they're really just a lot of issues in the markets yet. But when you start to dig into the, I guess we'll call it the core stocks, there are more of those looking good. That's why our database is 51% long right now. We have 548 earnings reports coming out today, and nothing really significant, any large companies or anybody. It's just core stuff. I mentioned the other day, we've got like 2,200 of the reports coming out this week. And other than a few handfuls of some big companies, it's all core primary U.S. economy stuff. And it's amazing that we're not really getting I guess, a lot of change in, I guess I'm trying to articulate what I'm trying to say here, is we're not seeing those companies rolling over. We're seeing the big guys, the Metas, the Amazons, all that. So we're seeing a realignment, I think, of the economy right now. I don't have a hypothesis of this, what I think what it really means, but I'm working. There's one coming out, and it does lean all toward a shift going back. And I think I mentioned the other day, I'm just kind of still on a mini rant here, is that what we're really seeing is a shift, is if there's really going to be onshoring and companies coming back and making money. Guess what? It's not going to be, Google doesn't make anything. Apple makes phones. They basically make them in China. So if they're going to be onshoring, then what that's going to do, that is going to open up some eyeballs on some U.S. companies that are going to be able to participate in that. And, the whole chip shortage thing is blowing up because there was no chips. Now there's too many chips. It's almost like before, I guess maybe the reason why, we're looking at markets just being in this sideways zone is because everybody was bearish. Now everybody's bullish. So there's just too many. The pendulum's just swinging. It's swinging too fast. And that really, what that equals is sideways trading ranges. But on these mid-cap and small-cap stocks, my goal going forward, probably for the next 6 months, especially for our institutional clients and for those of you that are using our software, run 401ks and do those type of things, my goal is to try to figure out where are the hot spots in those mid-cap and small caps that are going to be potential players for an onshoring type strategy, and whether that gets any kind of traction or not. I think that's the big issue here. So let's check the clock here. We got about 10 minutes to go in the show, and so let's go back and go back into the markets real time just to get an idea on that. And I think that we've got a really pretty decent bounce back going here. You can see the chart up on the right hand side of the chart. So actually it's the left hand side on your screen, isn't it? So I apologize. It's to my right, your left. So anyway, the other thing that's happening here, the chart on at the bottom there is actually the 10-year, and it is back to 412. So you can see it's just this 5-minute chart on 10 years. So it's been declining. So let's take a final look at the markets, just how they're set up. We'll take a quick glance at the algos, and then we'll finish up today. Just see real quick. I just saw a question that came across, and it's valid why I'm sitting here before we do this, is CPI. Yeah, let's talk a little bit about tomorrow's CPI. I think the numbers I saw coming in around year over year 8%. Everybody seems to believe, this is interesting. Thanks for asking that question, by the way. Everyone seems to be locked into these hypotheses or the thesis of, well, inflation is going to remain higher and it's going to last longer. The Fed has to keep rates higher for longer. That seems to be right. I'm not discounting those things. So I think this whole narrative of inflation has peaked is probably an okay thing, and it probably has. We don't know what's ahead of us. I think it's going to be interesting to see what happens. I had a number, and I wrote it down, but I lost that number. But there was a number. The U.S. has sold a ton of LNG to Europe, and Europe's got all their coffers filled up. But we'll see how that goes through the winter. So far, so good. I mean, we're into November, and the long winter ahead yet. But the point is that is there going to be another energy shock? Is there going to be something to go on? The whole SPR release thing was maybe handy, but they've released all that they can. And right now, if they have to buy it back, it's not going to work out very good. You know, their goal was to buy it back at 70 or something. Well, good luck. Try to find a 70 handle around. Maybe it'll happen. But if it does, someone can't come in and buy 200 or 300 million barrels and expect the price to stay at 70. That's not going to work that way. So you bring a big buyer in, you're not going to be able to get those prices back on. So anyway, so the answer to the question of CPI, I think that it'll probably come in as expected. I don't have any great expectations either way from that standpoint, but I do think that it's going to moderate. And I've talked about this before, and maybe for another time, is that I think there's a lot of inflation that is embedded into the economy, primarily in wages. It's very difficult, especially with rents and other things still hanging in there like they are. Very difficult to be trying to go, okay, well, we helped you out when there was inflation. Now we're gonna cut you back to where you were before. Now that inflation isn't around anymore, no one's going to go for that. There's a couple things that you don't get once you do something. Once you pay somebody, it's hard to take them backwards. You got to have some pretty loyal people to do that. It's not a good thing. It's a very bad thing to have to do that, and it never feels good. And for the most part, that would have to come out of austerity and a lot of pain in the economy. And the general expectation is that we're going to continue to see employment numbers stay fairly good, meaning there's going to be a fair amount of jobs around. So I would say, as expected, I'm not sure the market's going to have, unless it comes in hot some way, I don't see that that's going to happen. I think it will come in as expected. So I don't have a lot of, feelings about whether we're going to get a big jump or not. We'll be around right after the report. We'll be here on the open tomorrow. And it's actually, I would tell you, it's been quite nice being here on the open with everybody. It seems to be working out pretty well from the standpoint of the channel. Just remember, folks, share this tell your friends, share the videos, all the routine. We got 5 minutes to go. Just looking at a couple comments here. Yeah, that's the other thing. Eric just said something that also is true. Is once you raise prices, I'll have to find this. I have it, the cartoon. It's an old cartoon, and it's a guy standing in a post office, and he wants to buy futures on postal stamps because they only go up, right? So there's certain things, once they go up, they don't come back down. Electric bills, they're not going to drop these down. If the Hoover Dam got 100% filled to the capacity of what it can hold, they wouldn't lower rates. Nothing's going to lower. The whole push toward electricity is even worse because now electricity is going to be scarce, and I'm not sure that's going to happen. Fossil fuels will be around for a lot longer than most of us think they will be, and I think that maybe most of the public, this whole electric push is a joke, and it's just going to cause rates to go even higher unless they embrace nuclear, those type of things. So we're about 2.5 minutes to go. Yeah, and Michael, you're right. Yeah, fast food. Nobody's going to drop they're going to take advantage. If food prices come down, that's not it. I'm hoping to get I'm trying to get a friend of mine to come on Wednesdays today. I was unable to line it up for this week, but I do have intentions of having about a 20-minute spot where I have a guest, somebody that I know that we can have an interchange just for about 20 minutes, a little dialogue. I want to start to add that into this channel as well. So hopefully we'll be able to get some folks in, and Wednesday will be a big day for everybody to watch. So we're getting pretty close here. Let's go ahead and let's go back to the markets. markets here, and let's just take a look at the level 2 stuff, see what's going on. We're trading 11. We printed up into the 20 handle, back into 09. No follow through, just very choppy session. I just don't see anything going on. I set up all the parameters earlier. We'll go back over just real quick and click through the algos, and then we'll bring that up. So just looking at the 1 minute here, you see the algos are. If you recall, when we started earlier, they were suggesting that we were coming into a bottom. We'd see a rally. We did that. Now there still some lower prices. Fib target 1, 2, and 3 on a 1 minute hit. Let's go over to the 5. Yeah, you can see the same kind of scenario. If you recall, we were one or two bars away from a bottom. That happened, so that's not it. So in about 2.5 hours, I'll see everybody in the live room. Hopefully we'll get some good trades to set up here today and see if we can make some money. But everything seems to be set up. Let's go over here. This is the 1 hour. So let me just go through the algos very quickly on the final setup here. So like I said, we still had downward pressure, even though we had that last bar where we were talking, it was about to finish. We did get a rebound back to the moving averages that I talked to you about. If you remember, it was around 21, 25. We got to 25 here, and now we're coming back in. The algos are suggesting still downward pressure. We should start to stabilize here over the next 1 to 2 hours. I think what we see in the big scheme of things, that 92 number, if you remember the market grid numbers there. Let's just take a look at NASDAQ, see how it's set up as well. Same thing here. We're going to continue to see this overhead pressure right at the simple 10 moving average. That's going to be your ceiling, and we should see some potential stabilization here, but everything's still down. I think we're fairly close. If you look at those daily market grid numbers, if you have the indicators, you have them, just use those, that S1, S2 range as probably the downward support. I don't think we get out of hand here at all. And we'll do a quick look at RTY and we'll call it quits. RTY is actually, like I was showing you earlier, we were looking at this off the open. It was suggesting that we're bottoming here. So the 10-period moving average, it looks like we're going to be able to get above that. So maybe the Russell is the bright spot, and we can pull these indices on the NASDAQ and the NASDAQ and the S&P. Maybe we can pull them back up toward those 10-period moving averages, maybe get above them. It looks to me that like the Russell's going to try to firm up in the next couple hours. Well, folks, it is 1 minute past the time, so I appreciate everybody coming. Make sure before you go, hit that like button, and let's get this channel. I really want this morning session to become successful, and we get a lot of live viewers. So tell your friends, let's get everybody here, and we'll see you tomorrow at the same time. So have a great day trading. Those of you in the live room, see you there in a couple hours.